Joining us now, Yannick Naud. He's a portfolio manager at Glendevon King Asset Management. Yannick, good to see you this morning. Thanks very much for coming in. How much are you in the peripheral debt market at the moment?
In terms of exposure, or in terms of time, we spend a lot of time analyzing the debt of peripheral Europe. In terms of the actual amount of money invested, right now it's very limited. It's very, very difficult to make an assessment, an economic assessment of the yield where those papers should trade, because it's just a political. Most of the movement are political driven. So in terms of pure analysis, it's very difficult to do so.
Yeah. So what would it take for you to see over coming days to convince you that perhaps you spend a bit more time buying and less time analysing?
I think the real challenge right now it's probably to have European bank buying themselves Italian, let's say Italian or Spanish government bonds. I think that will be the first step. What the ECB did last week with the LTRO was to encourage European bank to buy government bond paper. And I think what we'll see is the trend, banks and government will get closer and closer in terms of government guaranteeing bonds for banks, like we saw last week with 40 billion government guaranteed Italian bank paper, and bank buying government bond as well.
I'm glad you mentioned Spain, Yannick, because obviously the focus is very much on Italy this week, but we have a new Spanish government just been sworn in.
Yes.
We've not had any big policy announcements from them yet. What would you be hoping to see from the Rajoy government to see a bit of a rally in Spanish bond markets through January?
Yeah, on the 20th of November, Mr. Rajoy was elected, and what is interesting to see is that before the election, the Italian and the Spanish 10-year paper were pretty much yielding the same. There were around 50 basis point difference between the two. Now the gap is very different, because now in Spain we get closer to 5%, 5.1%, and Italy, the 10 years Italian paper is still above 7%. To me it says that it's much easier for an elected government to push through structural and budget reform. And right now, Mario Monti announced the third austerity budget since June, but we don't know yet that he will be able to push through those reforms. We know he can do it at the parliament so far, but you know, when there will be people in the street, when he will do some cut, both in terms of labor or in terms of taxing housing and taxing luxury goods, it will be very difficult to see if he can actually deliver on that.
I think that's a really important point. As I've said several times in the last few weeks, we should always keep in mind that Silvio Berlusconi still has a big majority in the Italian Senate, and Italy actually has what we policy wonks call a bicameral symmetric system. In other words, the upper house has more or less the same powers as the lower house. So you're right, Yannick, the Monti government is still vulnerable to resistance to measures it's going to try and push through. But let's, just to go back to Spain for one sentence, let's keep in mind that the right of centre PP government in Spain is going to have to take on the public sector unions there, and we could actually see civil unrest escalating in Spain in much the same way that we have in Greece, and we're beginning to see in Portugal too. So it's going to be a struggle for that government too.
Yes, there will be. I mean, there is 25% employment in Spain, 49% of youth unemployment. So obviously there will be some reaction, and it's not going to be easy. But in a way, we have to think that one by one, every elected government in Europe, and it started in UK last year, are doing the right thing and slowly pushing through reform in order to balance the budget.
France, come this summer?
There's a presidential election end of April, beginning of May, followed by the parliament election. Obviously, I don't know who will be elected, but depending, at least if it's not the socialist, I think my bet is there will be a coalition government in France, which is new again, a bit like in UK. And this coalition government will push through budget reform and structural reform, because budget alone, I mean, it's not very good, because it's not very good for growth, and European government need to have budget in order to increase growth.
So we haven't got much time left in this year, but is there still chance that we'll get a ratings agency downgrade of France's AAA?
Yes.
Before the 1st of January?
On the 5th of December, S&P said that they were putting under review the AAA country in Europe, and the time was around 3 weeks. So my guess, it's very possible that even this week we see a downgrade of France.
And not only France, I'd suggest, Geoff. I was road showing around Europe before Christmas and asking audiences how many AAAs did they think would still be left in the Eurozone by end of January 2012 out of the 6, and basically the answer I was getting was between none and 3.
I think Luxembourg and Finland have to stay AAA.
Finland and Germany, yeah. Yes. Netherlands, possibly.
Yes, I think Austria and France are pretty much in the same ballpark. I think it's going to be very difficult for both countries to stay AAA. But I would say that Finland and Luxembourg have every reason to be AAA.
So very quickly, where is there a safe haven trade with potentially reasonable return in the government market in Europe at the moment?
In my view, the only place in Europe where there is a type of safe haven, like like gold or like Swiss franc this year, is Nordic countries, whether it's Norway or Sweden. Denmark is a bit different because the currency is pegged to the euro. I mean, we could have some surprise there because the rates in Danish krone are lower than in euro, which is quite surprising. But I think Norwegian currency and Swedish currency will stay strong. Over there, you have very low unemployment, high growth. The budget's in surplus for a lot of different reasons for oil in Norway, because of the strength of the economy in Sweden.
Yeah.
And there, in terms of allocating and buying bonds, allocating credit, I think in those markets you should have some good surprise.
And let's quickly have a quick look at the corporate market, because it's been a difficult market to make money in through this year. We've seen this spread in yields move out because I guess they've been infected by fears of what's going on in the govie market. But is it going to be a better year for European corporate debt?
Yes, I think 2011 was a year of very high correlation, and when every risky asset were moving in the same direction. I think 2012 will be a year of relative value. And there's a lot of reason for that, but it will be a year of relative value, and therefore it should be the year where you pick the right company compared to the other one. On my view, it's in terms of high yield, for example. In the Nordic country as well, you have a quite liquid Nordic high yield market.
What are you buying?
Yes.
What are you buying in the corporate?
Specifically? I mean, we try to...
Yeah, specifically.
Obviously, we're quite bullish in the energy sector and the oil industry, because we think that they will be, because of geopolitical reason, even though the economy, the global economy is not growing as much as it should, the price should stay quite high. So every energy-related company, and obviously in Sweden, Denmark, and in Norway, there's quite a lot of those. And we avoid shipping, for example.
Okay, Yannick, thanks very much for coming in. Thank you. Yannick Naud, Portfolio Manager at Glendavon King Asset Management. Right, let's